Welcome all to the Node, your place for news, interviews, and education in crypto, DeFi, and TradFi. And today, myself and David have Jonathan from Block Turtle to talk to us about a project that he has going on. How you doing, sir?
I'm very good. I'm very good. It's Friday. It's in the afternoon in almost a sort of a warming Sweden. I don't know. It's kind of getting warm. It's kind of
There's
getting
a
warm.
there's a warming trend going on. So
Yeah, yeah. Compared to crypto, it's looking better.
awesome, awesome. Well, we're gonna David, how you going? How you doing? Let's ask how my co-host David's doing real quick.
I'm doing pretty good, Mike. I'm doing pretty good. It's my 37th birthday today, so
I
celebrating my
wasn't sure.
birthday.
Happy birthday! I wasn't sure if we were supposed to out you. Don told me and Jeff what was it, Monday or something like that. That was your birthday today, so I was going to wish you a happy birthday here in a bit, but I wasn't going to out you. I wasn't sure if you wanted
No,
your
no, no.
birthday.
It's good. It's good. I'm doing great, Mike. We've got a lot going on with the node, right? And
Yeah,
we're about to launch some exciting stuff. So, hey,
yeah,
man, blessed. Things are good, man.
absolutely,
Birthday.
absolutely. Well, let's go ahead and jump into kind of introducing where people can find all the information that they don't have to pay for, and uh, and then we'll get into a little bit of news, and maybe we'll have Jonathan jump in on some of the news and get his opinion, and then here in about 45 minutes, then we'll jump into our interview portion and start diving into what Jonathan has going on. How's that sound?
Sounds good to me.
Awesome. So let's add you guys to this. So this, if you want to join the conversation, if you want to jump in the chat with Ellie and Jeff and the rest of the crew and ask questions, if you have questions, comments, you want to tell us that we don't know what we're talking about, you want to troll us, whatever it is you want to do, come on over here to YouTube at the node underscore channel, and you can jump in the live chat and you can see all of our different shows that we have going on. So we have, of course, the Node from 9 a.m. to 11 a.m. Pacific. We have Crypto and Chill Tuesdays and Fridays at 5 p.m. to 6 p.m. Pacific. We have the Blockchain Report Monday, Wednesday, and Thursday at 11:30 a.m. Pacific time. We have DeFi High with DeFi Don immediately after this show, Monday through Friday at 11 from 11 to 11:30. We usually go a little bit over because me and Don get talking about small business and life and whatnot. We got David with DeFi University. I need to figure out what time, if there's a locked time that he wants to do that, or if it's just kind of when the markets cool off. But he does a market wrap up, a daily market wrap up that is a really good summary of what went on that day. So we have something to start the day, we have something to end the day. We bookmark or bookend it. Saturdays we have Jeff with Saturday Night Fever. Actually, tomorrow night at 6, he has an interview with a friend of his that's a DJ, and they're going to be doing some tutorials, and he's going to interview him and talk about kind of his career and being a DJ and things like that. So if you're into that kind of thing, and then of course last night you got the red pill, where basically me, David, Don, Jeff, whoever wants to show up, Colin, sometimes Drew over Blockchain Basement will show up, and we just get drunk and talk shit. So
Yep.
a lot of
It's
fun.
always fun.
It always is. And you never know what we're going to talk about. We start off where we're going to talk about something like super serious and super important, and it ends up degrading into like locker room talk, basically. And then we got Gaming and Chill, where a couple of the members of our community, Jay and Ellie, they're going to start streaming this weekend. Just Arc Raiders or Web3 games, whatever it is that they feel like playing and streaming. So got a lot going on here. And then of course, one of our other community members does AI music and has a pretty impressive career in music in general. And David and myself have been talking to him, and he's starting to send us custom, music that he's created, and we're going to start streaming that as well. So a lot of really cool stuff going on here. And then, of course, at X, you have at the Node channel if you want to follow us there. Oh, and then finally, you got our website, thenode.pro. I've already posted all of the links to the news that we're about to talk about over here in the research links. So if you want to go deeper into some of these topics as we go over them, we don't have time to go in depth on all of them. But if there's one that interests you and stands out to you and you want to go deeper, that's where you find that. DeFi University, 100%. You don't have to pay for it. You can go into DeFi University and everything from beginner to immediate to advanced DeFi. David has, with his own money and time, has built out a whole DeFi course. It's all structured. It has quizzes, and you can educate yourself on DeFi and start investing.
It's all cash flow negative, Mike. Cash flow negative. That's right.
We can't use the F word. We can't use the F word. We have David provides one-on-one coaching. You do have to pay for that. That is very time intensive. He takes a lot of time out of his schedule to do one-on-one calls with you, educate you one-on-one on and streamline the process to getting you up to being a profitable DeFi trader or using DeFi to earn. And then our AI newsletter that's about to go live. David got our bank account, so now we can start setting up all the payment gateways and all those sorts of things. But I'm actually going to show you that because I generated it this morning and used Bitcoin, ETH, Solana, Aerodrome, Canton Network, coin, Coinbase's stock, gold, and silver. And I wanted to show you all what it looks like. So this is the snapshot where you get the trading ranges, all of that sort of stuff. So, on the assets that I selected, S&P 500, the NASDAQ, the Dixie. And it shows you the changes, where the source that it got it from, if you want to check and make sure. You have the ranges, so support and resistance. These are the ranges that you would use if you were wanting to enter into the liquidity pool and earn yield on these assets. It tells you what the bias is, if it's leaning bear, if it's bearish, if it's neutral, if it's bullish, whatever it is. And then it gives you the range notes on each of the assets of why it is that it's determining that, if it's leaning bearish or bullish or whatnot. Now, the big stories, and this is how I'm going to segue into the news today, is we're going to start out with some of the news that it pulled, from the internet. And again, this is something that we're going to offer for sale for $20 a month. You can generate the newsletter anytime you want. And, whatever, Jonathan is over in Sweden. It's, 5 p.m. over there. Or 1700 for those that aren't in the U.S. They do the 24-hour clock in a lot of other countries.
It's very confusing.
But, what's that?
It's very confusing.
It is. So it's but you can pull this if you're traveling. Anytime that you want. You don't have to wait for me to generate it and send it to your email. This will be delivered to your email, or you can generate it on the fly. But and give you a snapshot. So crypto regulation takes center stage at DC Blockchain Summit. Lawmakers and federal agencies eye new frameworks as digital assets become a key campaign issue ahead of midterms. David, I know we've talked about this a lot. I want to get your take on this because this is something that I think is why Democrats are dragging their feet so much on the Clarity Act. And, it's the midterms are coming up in November. And I think they feel that they're going to flip some seats and maybe take the House, take the Senate, something like that. So what are your thoughts on this?
Yeah, I really, really do not want to see, Democrats take power in Congress because for me as a digital asset investor, what that will likely mean is that, all regulation that is pro crypto immediately either stops, or we might even see, that crazy screaming lady from Massachusetts, Karen, whatever her name is. We might see her all of a sudden try to revive the choke point stuff. So I'm really Elizabeth Warren, right? Yeah, Pocahontas. Oh man, But there was another interesting thing that happened earlier this week, though. And it was all about what the SEC and the CFTC had to say. Now, the problem is that is not legislated yet. That's not like a statute. That's just like policy. And because that's policy, it means that it can change in a different administration. So, that needs to become statutory. It can't just be left as policy. And it was so interesting because they basically selected the Sweet 16 of digital assets. And the Sweet 16 is pretty like sour, actually. It's like the sweet and sour 16 because there's a couple in there that are good, and then there's a lot that really aren't. So it was just so strange that there were a lot of digital assets that made it into these the Sweet 16, which is basically when these assets are quote unquote detached. So in this framework that the SEC and CFTC jointly released earlier this week, a token starts as a security, or it can start as a security and then become a commodity. So it goes from being attached as a security to detached as a commodity. And the SEC, CFTC said, hey, these 16 assets, these are the only digital commodities right now. But there's a framework where securities can become commodities. So, yeah, it was really, really strange to go through their own framework and try to apply their own framework to the 16 digital assets that they are now saying are commodities. Because by their own rules, a couple of those assets are not digital commodities. It's so funny. So we'll see what ends up happening. But look, regulatory clarity is a positive thing because it means that innovation becomes legal in the United States. And that means that there's less, exporting of this industry to, more crypto-friendly jurisdictions, maybe in like Southeast Asia, or, South America, or, maybe, Dubai, the Middle East sometimes, sure. So I think the idea is to spur innovation in the United States. And that can only happen if you know what is legal and what is not. And basically, if the Democrats get power, man, this year in November, they're going to stop everything. Everything pro crypto, they're going to stop it. So, yeah, I just really, really want to see this legislation pass before the midterms.
Well, let's ask Jonathan. I'm kind of curious because you're in Sweden. So, I mean, what's going on over there as far as crypto legislation? Are they kind of following the lead of the U.S. and the U.K. and places like that? Or are they charting their own course?
So I think essentially it's very important that decisions and what kind of clarity that you get in the US, like the decisions that you take in the US, it affects Europe, it affects Sweden. So it is very important for us as well that if the US like brings out clarity to the whole crypto, then Europe will follow. And in Sweden particularly, it's kind of we're very much behind in blockchain and crypto in general. There's not a lot of like knowledge, but it's sort of starting to come, like companies are starting to like establish themselves a little bit. So it's tricky, and I 100% agree that like clarity will bring only positive, like it will only be positive to the whole crypto space.
And that's important to understand, and why it's so important that the U.S. gets its shit in one sock. That the government gets these clear guidelines, guardrails for this legislation for crypto, because like Jonathan just said, most countries out there follow the lead of the U.S. I mean, the U.S. historically has kind of built the framework, the financial framework, and other countries just kind of copy and paste for the most part whatever they come up with. And that's why it's so important that a lot of this stuff gets done in case in November some of those seats flip in the House and the Senate, and and they are able to stall for the next 4 years, or excuse me, the next 2 years, and they're going to see if they can flip the president as well. And if that happens, who knows what's going to happen with crypto.
So Mike, I was just reading about some of the laws in Sweden, some of the crypto regulation in Sweden, and here's the thing, like, dude, crypto doesn't need regulation. Crypto doesn't need regulatory clarity. We don't need any of this shit. It's just because things are denominated in dollars. That's the only reason. You see, if you denominated, we don't need that.
Build and to be able to invest and stuff like that, they do, because they have that fiduciary responsibility to their investors, and they can't be investing in speculative, assets.
I guess the point I'm trying to make is that digital assets can be a completely parallel financial system and do not need to comply with any arbitrary rules made up by country A or country B. None of it really 100%. Matters. Yeah, when code is law, none of that matters. It's just that everything's denominated in dollars. And so because everything's denominated in dollars, you have to comply with these rules if you want those dollar flows. But if you care about sats, then maybe you go live on an island and you don't care about the regulation. I'm reading through this MICA
you're
stuff.
100% right. If everyone in the world just decided we're not playing the fiat game anymore, we're not playing by their rules anymore, and we just all adopted Bitcoin and used sats and use this parallel system, 100%. That's a real thing. However, that would take massive adoption. That would take, there's a lot of things that would need to occur. So in lieu of that, to have this, coexistence of, DeFi and TradFi, there needs to be guardrails, because, it's going to take these, traditional finance system to build on blockchain technology, to onboard, grandma and grandpa kettle that, isn't going to know that they're using blockchain technology, because they're going to use the same apps and they're going to use the same banking tools as they've always done. But the banks, because they built out, these systems, they're going to be using the rails of blockchain technology, and they're going to be able to offer, DeFi opportunities to people to earn yield. So it's going to be interesting to see how this evolves.
So yeah, I'm reading about this passport system in the EU. Jonathan, what can you tell us about the passport? It's like the golden ticket in the EU's MICA framework. Well, what exactly is that?
Are we talking about
for digital assets?
Actually, I don't know. I don't have the answer.
Okay.
For that.
So what it looks like to me is that this passport system is a way to attach your information to digital assets that you hold on centralized exchanges within the EU. So basically, it's so that they can tax you whenever you send an asset or dispose of an asset, so that they can just like tax you no matter where it goes within the EU, because they want to attach your personal information. They call it a passport. It's called passporting. I'm just reading about this right now. I remember reading about MICA back in like 2024 when they were first proposing that.
We got about 10 minutes left before we start the interview. I want to make sure we hit a couple more headlines before we go too deep on one. But real quick, let's Chuck Norris. Quick shout out to Chuck Norris, 1940 to 2026, the legend. Freaking had to give a shout out to Chuck.
Yeah, that's a shame, man. He was such a badass dude. Even when he was like 60, because he died at 86, but when he was like 60, 70, like 75 years old, he could still beat your ass, man. Like,
dude, I'll tell you, I wouldn't. I was watching him a couple years ago, and he was going to work on a heavy bag, and he was still doing like high kicks and spinning heel kicks, and he was putting some stank on it. I was like, the legend. All right, let's hit a couple of these. I'm kind of done talking about the Strait of Hormuz. I think everybody knows what's going on with that. Inflation and rates. I think let's go into TradFi. So Coinbase goes traditional. Coinbase has launched stock perpetual futures for the Magnificent Seven: Apple, Tesla, Nvidia, etc., further blurring the line between a crypto exchange and a traditional brokerage. I know that you have very deep roots, David, in both TradFi and DeFi, obviously. I mean, what are you seeing in these markets, as that line between TradFi and DeFi becomes more and more blurry and they merge, more and more?
Yeah, I think they're trying to go to 24/7 trading. That's
Yeah.
that's what they're trying to do. And look, I'm all for it. I love 24/7 trading. Um, the only thing is that I'm not the biggest fan of trading on centralized exchanges. But hey, you know what? It works for a lot of people. So it looks like what Coinbase is offering here are two distinct ways to play the Mag 7, those magnificent seven stocks on their centralized exchange. You can, I guess, trade these single stock perpetual futures, or you can trade it in a basket. So it's the Mag 7 plus a crypto index. So that would be the Mag 7 stocks plus Bitcoin plus Ethereum plus their own Coinbase stock. And you can trade these with up to 10x leverage, it looks like, cash settled in USDC. And 24/7 for the single stock perps. So
Mhm.
it's so funny because it's only available right now, it says, to non-US retail and institutions. So that brings it right back to that regulatory clarity that we
Yeah.
don't have yet.
Yeah.
So that's just so funny that Americans can't trade these perps, but
Mhm.
foreigners can. um just
It's
weird.
and it's a testament to what you were talking about, David, with where these DeFi can exist parallel to the traditional finance system, and we don't have to let them dictate what we can and can't do. It's just that's the bottom line. So I'm 100% all for what David's talking about with where we can decouple from the what I think is the corrupt system that a lot of the governments are doing, where they're bending the rules to their buddies and themselves. So they don't want us to earn yield on stable coins, for instance. It's our money. We should be able to do whatever the hell we want with it. Why
Yeah.
why should we why should they be able to tell us if we can earn yield on our money or not? Or if David wants to lend me $20,000 against my house, that's his business and my business. It's none of their business.
Right.
So anyway,
Well, I mean,
I'll get off.
here's something else to think about, though, Mike. If anyone is listening to this and wants to trade those Mag 7 perps over on Coinbase, just keep in mind that liquidity on the weekends or even after hours during the week is
It's thin.
likely going to be very thin. Yeah.
Yeah.
So just be cautious.
It gets it's very easy to move the markets, and that's what you see in crypto a lot. Is on Sundays usually you'll see massive dumps or pumps, and as the markets kind of start to wake up, and over in Asia and whatnot. So yeah, there's a lot of manipulation that happens with that thin liquidity David's talking about.
And also, Coinbase uses a funding rate mechanism. So
Hmm.
if you're going to trade perps, you need to understand funding rates. And there's plenty of education that we put together that explains funding rates, but gotta learn that
DeFi
first.
And
Yep.
if you want to learn about that stuff, because I mean, a lot of the verbiage that me and David use is all taught in DeFi University. And again, it costs you nothing to go there and learn this stuff.
Right.
So go to the node.pro, click on DeFi University, and get to work. Because if you're not educating yourself, then you're setting yourself up to lose. So, uh, institutional tokenization. Europe's largest asset manager, Amundi, debuted a 100 million tokenized fund on Ethereum and Stellar this week. So let's dig deeper on that one, and I'll actually share this screen. So let's see. Let's scroll down. The Spico Amundi Overnight Swap Fund, or SAFO, represents the Paris-based firm's second blockchain-based fund issuance in 5 months. The asset manager in November issued a tokenized share class of a money market on Ethereum in collaboration with Casasis, I guess. The fund is structured as a tokenized sub-fund of Spico SciCav. Stop with the pop-ups. Amundi said Safo offers fully collateralized total return swaps with top-tier banks to maintain overnight liquidity, subscription, and redemption of 4 currencies, so Forex, including the euro, US dollar, the British pound, and the Swiss franc. Is CHF?
Yep, yep, that's right.
So, David, can you translate that for those of us that aren't, like super financial whizzes?
Yeah, so I mean, it's just a money market fund on chain. So it looks like this bank, Amundi, is with how many? 2.3 trillion. This is Europe's largest asset manager. It looks like they're following in the footsteps of BlackRock, and they're just moving down. And starting to tokenize RWAs. So if you've got, a euro or a dollar or a pound or a franc denominated money market fund, they're basically just holding cash or cash equivalents or maybe bonds in there. And so they're just starting to tokenize this stuff. And notice the size of it, very, very small. So they launched a $100 million tokenized fund on Ethereum and Stellar. Now, I'm not quite sure why they use Stellar, but okay, that's fine. But 100 million is very, very small. And it looks like the smallest deposit that you can make is 1 unit of currency. Now, I'm not quite sure exactly what they mean by 1 unit, because usually when you're looking at stuff like this, a unit like that, if you say like, you're talking Forex and you say 1 unit, you usually mean $100,000 or 100,000 euros or 100,000 francs. That's 1 unit.
That's a very like I would think like a unit would be like $1.
No. Yeah. So I'm not quite sure if 1 unit here means what a unit means if you're in Forex, or if it just means like $1, €1, 1 pound, 1 franc, something like that. It seems like it's aimed at professional investors, but what exactly is the yield on some type of money market fund like this? What is it going to pay? Why?
One thing I do want to point out, and we'll dig for that, or maybe while I put this out, you can dig for it. But it's I want to point out why this is the gravity of why this is so important, and why the tokenization of real world assets is so important. So the asset manager noted that the fund offers near instant settlement. So as David's mentioned before, usually when you're trading in TradFi, you have to put in an order, and sometimes it takes days before that order is filled. And so this near instant settlement is a very big deal, because it allows you to access that liquidity much quicker. If you sell, then that liquidity is available to reinvest, or to take profits, or whatever it is that you want to do with it. Flexible custody options, real-time transparency of the shareholder register, 24/7 borderless transferability of fund shares with programmatic access available via API or smart contracts. So this is what they're talking about with using blockchain technology to upgrade the traditional finance system. Is it allows for much more functionality, and the what's the term that they use for liquidity, to where it's able to move much faster, and you don't have to have a lot of these like escrow accounts and things like that to facilitate the movement of liquidity because of the near instant settlement.
Yeah, so better velocity, less friction.
Velocity of money. That's it.
Thank you. So I'm looking here a little bit about that money market fund, and it basically just is going to track short-term rates. So that means in dollars you get 5%, in euros 3.25%, in pounds sterling 4.5%, but it's overnight. So that means if there's a move by one of these central banks, that's going to immediately affect how much you earn. So yeah, I don't know who this is for exactly. Maybe this is for like professional investors, but if you're a pro, why in the world would you just want like the risk-free rate of return? That doesn't sound like you're going to beat inflation. Maybe there's some way to use a product like this as part of some other financial engineering, but yeah, it's just kind of interesting to see that Amundi or whatever, that they're following BlackRock's footsteps.
Well, so we hit 9:30, and I want to make sure that we have enough time, and give Jonathan enough time to kind of fill us in on his project, and we can touch on some more news, at the end if need be. But Jonathan, so this is a block turtle. Like, kind of give us your quick elevator pitch on what exactly is block turtle.
So it's a portfolio tracker, but it's multi-chain. And so what it does is that you can view wallets from Sui chain, Solana, and EVM chain, and get a nice overview in one dashboard, essentially.
Gotcha. Here, Mike, let me take over the screen share so that I can go through. Or Jonathan, are you sharing your screen here? Because
I can share the screen.
Yeah,
No,
I really like.
It's me. Go ahead and take over, David.
Yeah, because I really like to see Jonathan go through his own tool that he's built. I think that would be really, really cool to see.
Yeah.
Because that way, maybe you can talk us through different features, how you use the tool that you've built, maybe some features on the roadmap, what you plan to build.
Yeah.
Be really, really interested to see that.
Let's see.
Bottom middle, there's like a little monitor with a plus symbol on it. That's how you share your screen.
Yeah.
There you go.
Awesome.
Right. Yeah. So the issue that I've had personally, so I'm a big fan of DeFi. Like you were talking a little bit about is like I think hopefully that is the future of finance. And when I like I have assets in on the Sui chain. I have assets on Solana chain. I have it on EVM, and for the EVM chain, you have DBank. It's a really good site to track your assets on the EVM chain. If you go to Solana, you could use Jupiter, I believe. They have a portfolio feature. If you go to Sui, you can use Sui Vision. But to me, it's kind of like it. I don't get the overview of my portfolio, and that is kind of the idea is to how can I merge this together and have a portfolio dashboard and tool to track assets across these different protocols and chains. And it is still in a sort of an early stage. It's been in development for a year, but at the moment we've been testing it for a little bit, have a couple of testers on the platform, but now it's ready to open the doors. So what we have here is of course just your traditional overview of the market, just like you would see on CoinMarketCap. You have the chart. You can open up a trading view chart. If you want, you can see videos of people of your favorite token and have that, and you can go back to
the
wow.
Chart. So here, Jonathan, go back to that. Did you pull in YouTube?
Yeah. And it's specific for the token that you're looking at.
That's super cool.
So then you can like have a look at a video. You can like chill and look at the chart. You can review the market cap. You can compare it to the global market cap, volume, like you would on CoinMarketCap, for instance. And then you can go about your day and have a look at another chart if you want, and look at this video. So that is like a nice thing for me to like, okay, I want to learn more about this token, and just go to videos. Or you go to the node and learn about.
Sure, you can do that too.
yeah. But this is like, for me, I kind of wanted like just, okay, I want to quickly learn a little bit more about this certain token. And I have news for the tokens as well. So you can read about like news that I generate on the site. So then you can like.
Are you able to zoom in a little bit?
Yeah, sure.
Thank you.
Yeah, I think that would be good. If you could zoom in just a little bit further, that way we can make out some of the headlines there.
That's good.
So then we have a couple of like articles for Solana, and
now, Jonathan, tell me, how are those articles generated? Because it looks like your protocol, your platform generates them. How is that done?
So that is, it's essentially just I use RSS. I pull in various articles, and then it writes the articles and publishes it. And then it identifies like tokens that are mentioned. So I can map like news about certain tokens. And then within the article, you can like read about the chart and that sort of thing.
Very cool.
So it's just a like neat little side thing on this platform. It's essentially I'm essentially building things that I myself would want in like close at hand when I'm looking at tokens and trying to do a little bit research and learn a little bit more. Because like learning and going to various platforms, it takes time. So I like to just have it close in one platform. So that's one thing. Any more questions about that?
Yeah, I do. So I have a question about DeFi intelligence in the navigation section. So
yeah.
So tell us a little bit about that.
Are we talking about the Turtle AI that you see here, or?
So if you go back to, I think if you go back,
Gotcha.
And
so
then maybe
what I've done is
click on there. It is, yeah, DeFi intelligence.
And now it didn't work, of course. So let's see. Let's see if we can find something here.
Yeah, because I see it working. I clicked on ETH, and it's working for me.
Okay. Then I just need to,
There we go.
So what it should do every time you go to a token is that it pulls out, this is aggregated data it's pulled from DeFi Llama. And it just gives you a glance of pools for that token on various protocols. So then you could easily like just go to a token, go to DeFi intelligence, and then you get like an overview of okay, here there could be some opportunity in a pool, and that is the idea behind it.
Very interesting. Can you sort by APY or by TVL?
Not here. For that, you would have to. That is a good idea, though, to have it right here. For that, you would have to go to the DeFi section here, and then it essentially works similar to DeFi Llama, where you can select a chain. So we can take, let's go for Sui. And you can just filter out. Oh, what was going on?
That's just me. Every time I hear people call it Sui, I'm always like Sui.
Yeah, I always say like Sui, because that is the Swedish way of saying it, and I've learned that you say like Sui. I don't know, a little bit French in there.
Yeah, well, yeah, because when you say sui like that, it sounds almost like a question, like sui.
That's the Swedish melody.
Yeah.
That's the Swedish melody. Like everything sounds a little bit like a question. So,
That's funny.
so yeah.
So this
And
is
yeah,
basically a wrapper for DeFi Llama, right? That's kind of
yeah.
what this is here.
Yeah, so it's just pulling the data from DeFi Llama of like all the pools, and then displays it.
Very cool.
So it's nice to have. Obviously, DeFi Llama is like, if you want to go really in depth, that is the place to be. But here you can at least get an overview of a chain and opportunities.
Okay, so on Sui, can we see just real quick if there are any pools that look interesting on Sui? Because sometimes there can be pools on the Sui chain that have a lot of volume. So kind of interested in taking a look at that.
Let's see. Let's go for, can we find anything with some TVL? It seems a little bit. Let's see.
So I'm just going to take a look at the most speculative, because that usually means that you'll get a ton of volume. So I set the TVL range below 1 million, and then the APY range 50% and up. And then I'm sorting here by APY, and I'm looking for something that's got like a couple 100,000 in TVL. Yeah.
And this one here looks it's a little bit crazy. I don't think that's actually accurate enough.
Right.
So here we need a little bit more work to get it right, I must admit. But because I don't think it can't be accurate according to. No, it's not accurate. So this one needs a little bit more work, to be honest, because this doesn't is not correct.
Well, still interesting though. I really like having a wrapper for DeFi Llama like that.
Yeah, and what I like is to like the idea is to cherry pick the things that I like the most about like either DeFi Llama or certain protocols and that sort of thing, and put it together in a way that it's very handy for you to use. So that is kind of the platform, the ambition of the platform. But if we move
now, Jonathan, can you share with us a little bit about the actual tracking? Because that's what I want to see. Yeah.
So if we go to demo portfolio, what we do here is you
is there a dark mode? I'm a huge fan of dark mode. Oh, sweet.
Wow, cool. Yeah,
that's good. That's perfect.
Let's go dark mode. Okay. So what you essentially do is it's a manual.
Jonathan, I'm sorry for interrupting again. If you don't mind, can you zoom in just a little bit so that the audience can see your screen? Perfect.
Oh, yeah.
Perfect. Much better.
Is that better? I have kind of a wide screen, so I don't know if it's too wide.
No, that looks fine.
Yeah, let me know if I need to zoom in or anything. So it's you just input your wallet address. So there's at this moment like no wallet connect or anything. You just enter your address. And the purpose of that is, yes, it's a little bit more like hassle than just connect the wallet, but I feel it's like it's more safe, and you can just input your wallet address, and then at the moment it supports 10 protocols about on SUI or SUI. There's 5 protocols on Solana, and you just enter it here, and then you can have, with one button, you sync all the wallets, and it fetches the data from these protocols, what you have in the wallet that's just sitting in the wallets, and also what's on the various protocols. And you just have one sync button. And that was very important for me, to just make it as simple as possible, to just have like one button and sync. And then it fetches the data from Solana and SUI, and you get one unified view.
I really like that. I really like that. Can you scroll down just a little ways here, Jonathan?
Yeah.
I want to see, what
Yeah.
the DeFi positions look like.
Yeah, we can go to, this is like an overview of just overview of the portfolio. So you get like small snippets of like the highest assets, like top protocols and their positions. You get a little bit of your recent transaction history, and this is what I'm myself a very big fan of, and that I like need to keep track of, is how have I positioned myself in terms of like the kind of tokens that I chosen to invest in. Do I have large cap? Is like how many percent of that do I have? I have 1.7%. That tells me a little bit that perhaps I need to reallocate my portfolio a little bit, to be a little bit more on the safer side than rather on the like mid cap. I have 85% in there.
So I'm curious, how do you define a mid cap? So large cap would be maybe the top 5 or the top 10. How do you define mid cap?
So essentially it's the top at the moment it's top 10 protocols, or like top 10 tokens. But then you have mid cap, that is obviously lower. So and that is a thing that I'm kind of want to tweak a little bit further. But to me, it's like a way. It could be actually a little bit more clearer in the UI what it means here, and it says how Block Turtle defines a large cap, and how Block Turtle defines a mid cap. So that is actually a good thing that it should mention as well, so you don't have that there's no confusion, because you could define that in different ways, I guess.
So I'm curious here. You see where it says DeFi summary and total supplied, total borrowed. Can you walk us through that DeFi summary? So, and maybe click on where it says view DeFi.
Yeah. So what it pulls from is actually, here is the overview of your DeFi positions. And if we take a little bit deeper dive, it pulls if you have a pool position on Orca, and then you can open it up and you can see the range status of your pool. how much you have, and if you have any uncollected fees. And this is for Orca. It's working good at the moment. Also, you can go to, if you have any positions on Cetus, then you can get detailed information if you have any liquidity position, farming position, or staked. So that is, Cetus is very much supported at the moment. And then you could go to, if you're a fan of, I don't know, Bluefin, or if you're a fan of Jupiter, and you have a perpetual position, you can have a look at that and see what's going on here. And here we're doing pretty okay. We're 13% up, and we get the liquidity price, size, the collateral that I've used. So all of this you have in like the protocol tab here.
Now this looks great. This looks really great. I've got a question for you about your impermanent loss. How do you, if you're looking at a pool position, how do you track your divergence loss?
It doesn't track that at the moment. So there's nothing currently in the system that tells you this is your like permanent loss. But that is something that I really would like to have in the platform, to really give the user like more clarity on, okay, this is how much I've earned in fees, and this is perhaps the impermanent loss, and this is like the summary, that the actual, like, have I earned money from this position, or is it going poorly?
Okay.
But currently it doesn't like have that logic. I'm very much in the state where I'm building the foundation for everything else to be on top, like a tool like that. Like so at the moment right now, I'm building expanding on the foundation, expanding on protocols and support, and getting this kind of range status at the moment.
Yeah, it looks great, Jonathan. It really does. For me, I spent quite a long time, doing my best to provide liquidity professionally. And what I learned after, years of doing that was that I really, really need to track my divergence loss, my impermanent loss,
Yeah.
because if I could just hold the assets and outperform providing liquidity, well, then, I need to know that, right?
Yeah.
So if there's some way in a future version to be able to track that, that would be amazing. I would love to see that.
You're the man. You give the best feedback. Yeah. So great. I'm actually writing that down.
Awesome.
David charges by the hour, by the way.
Yeah.
Yeah. The DeFi consultant.
I know, right?
Yeah. That is great. Yeah. And yeah. So at the moment, I'm myself like I'm a big fan of Sui, and Solana and EVM. So that's where I'm like putting most of my focus at the moment, and just expanding. And to me, I love the fact to like have one place and like get a good overview of how am I doing, what are the positions doing, and then hopefully like in the future we could add like more information, like you mentioned, David.
Yeah. So here you're looking at where it says protocols, and so
Yeah.
each one of these protocols. If you scroll up to the top here, I want to go through them one by one just to see what it looks like. So Orca, okay, great. It looks like providing concentrated liquidity. You can see the range status, the current assets in the position, and the uncollected fees. And it looks like everything is denominated in dollars also. Very cool. Very cool. Have you ever thought about denominating things in Satoshis? I know that probably doesn't really apply here. You ever thought about that though? Like denominating in Bitcoin?
I haven't really, like, when I had this one time when I went to CoinMarketCap, and I accidentally toggled that off on, so I got everything in like BTC, and that I got so confused. Like, what is going on? What is going on? I haven't thought about it. I think that would be fairly easy to implement. It could mean that it takes a little bit longer to load everything because it would have to recalculate. But
Yeah,
I mean,
maybe for a future version. That's okay.
yeah.
But you see what we got a comment in the chat here?
Hmm.
It looks like Not Scoot Boy. Mike, were you gonna bring up the comment from Not Scoot Boy there? It looks like he's saying, would it be cool if we could see the monthly or yearly cash flow of all of our tracked positions as we're lending or providing liquidity? That would be a really cool feature to see.
Yeah, and I agree. At the moment, you might have noticed that there's no APR column here. There's no APR column here. And for SWE especially, it's been a headache to get that right. So I first and foremost want to ensure that you get accurate data of that, and then you could build a monthly cash flow function. So I love that idea. I would like
Yeah,
I would like to have that myself as well.
yeah, that would be really great. Something that you might consider, and I've already completed the research on this, so I could
Yep.
just hand you the formulas. But what you need is you need to know what is the volatility of the assets in the pool, and you need to know what is the difference between the volatility of the assets in the pool and the volatility of those same assets external to the pool. That difference is called variance or variance risk premium, or
Yeah.
sometimes people refer to it as volatility risk premium. And so
Yeah.
that's going to tell you whether you've got an edge when you're providing liquidity or not. That would be if you could show VRP somewhere for the pools, man, that would be next level because no one's doing that right now. None of the
Yeah.
tracking softwares track VRP. But if you could do that, Jonathan, that would be a really big deal.
Did you say you charge by the hour, or am I gonna get an invoice after this?
No. Hey, but I would love to see it, man. I would love to see
Yeah.
because and in that screener that you built, that's basically like a DeFi Llama wrapper.
Yeah.
If you could build in a column there that just tracks VRP,
Yeah.
then you would immediately know which pools to provide liquidity in. Because
Yeah.
the only pools that would give you an edge would be the pools with positive VRP. And that basically means if you don't have positive VRP, you don't provide liquidity.
Yeah. That's excellent. I'm taking notes here. So
Okay.
that like this is exactly like what I'm loving at being at this stage of the project. Like I'm building. I would say I have a pretty solid foundation to build on top of, and then just like get ideas and just test them and have like a solid platform that is actually useful for a user. And then just like I think I mentioned it to you before, David, that to me it's kind of a balance as well with how do you create an overview or a dashboard that doesn't overwhelm you with information and like still gives you the information that you need to make a good decision about what you're doing. And that is more of a design aspect
Oh,
of the whole thing.
well,
Yeah.
trying to minimize the noise. Trying
Yeah,
to
exactly. Yeah.
boil down the data to where it's just easily digestible.
Yeah, exactly.
And the data points that you need to see are different for different types of DeFi positions. So if I'm providing concentrated liquidity, I would want to see my variance. I want to know, do I have positive VRP? If I'm, executing interest rate arbitrage, I'm lending a stable coin, borrowing a different stable coin. I need to know, what's the spread? What's my net interest margin? I need to know, what's my health factor. I need to know
Yeah.
what my LTV or LLTVs are.
Yeah.
If I'm staking, there's a different set of metrics that I need to know. So yeah, it really depends on which type of DeFi operation you're performing. But this looks great. This is not overwhelming at all. I think that this is easy for my eye to follow. That's why I really wanted to have you on, because as soon as I took a look at your tool, like, it's easy to understand where the important information is. And I really like that. It's hard to get this right, man. So
Perfect.
what does it look like if you go to the lending? You see where it says
Yeah.
lending? I want to see what you got for lending.
So then we get the lending overview, and you only get your positions where you have you're engaged with a protocol where you have a supply and a borrow. So that's how the system identifies that this is a lending position. And then I've pulled in information about various protocols, but it could be more updated. But so here you get a glimpse of how healthy a position is, and you can see max LTV, the liquidation, what you've supplied, how much you borrowed. You can set an alert for yourself. So let's say that this position reaches 50%. You can set an alert so that you get a notification or an email to you that, okay, you need to take action now.
Got it. So what if you scroll up here just a little ways?
Yeah.
What I'm looking for is, of course, I need to be able to see LTVs. I need to be able to see my health factors. I need to know, the health status of a position, of course. But
Yeah.
I also need to be able to see how much am I earning on my collateral and how much am I paying on my debt position. And I need to be able to see my net interest margin. Like, am I actually getting paid to keep a position open, or am I paying to keep a position open? And if I'm paying to keep a position open, how long until liquidation? Because you can, pretty easily calculate that. If I'm, let's say, paying, if I'm over here on Camino Lend, right? And I've supplied, if you scroll down, it looks like you supplied $17 of SOL. Okay. And then, borrowing USDC against it. So let's say that, on that SOL, maybe you're earning a couple of percentage points. But if you're paying 7 or 8 or 9 or 10% to borrow USDC, you can calculate out how long it'll take if SOL doesn't move up for that position to eventually get liquidated. It's usually measured in.
So basically, the health.
Yeah, well, it would be time to liquidation.
So it would.
Isn't that what you use to figure out health, David? It's like the health of the loan, because if it's net negative, then it's unhealthy, and then if it's net positive, then it would be a healthy lend.
Well, it really depends on the type of position and what I'm trying to achieve. If I'm lending, a stable coin and borrowing another stable coin against it, then the most important thing is that interest rate arbitrage. Whereas if I'm, supplying a volatile asset like SUI and then borrowing stables against it, that's a levered long position. So, that's much more like trading. If I was to supply stables and then borrow a volatile asset like SUI against the stables, then I'd be levered short. So, seeing a leverage ratio would be pretty cool. That would be pretty cool. So that way you can immediately know, because I saw, Jonathan, I saw so many clients, get confused by this, that it's easy to understand when you're on a perpetual futures DEX. If I use 5x leverage, okay, if the asset moves against me by 20%, I go to zero, I get liquidated. But people don't understand that when you're on a money market and you provide SUI and you borrow a bunch of stables against it, and you loop that a couple of times with recursive lending, well, that's the same type of position. It's exactly the same. You're just levered long. So people don't understand that the health factor and your leverage ratio, you really need to try to get a sense for am I levered 3x? Am I levered 4x? If you immediately know, okay, I'm 4x levered, that would be very aggressive leverage on one of these money markets. Then know, okay, well, a 25% move against me and I go to zero. But it's not easy for people to understand that on money markets. What else you could build into this would be a liquidation price per position. Or maybe it would be very, very difficult to calculate that, like for a portfolio as a whole, if you're supplying multiple assets and borrowing multiple assets. But if you just got one lend borrow, or let's say you supply SUI, you borrow USDC, and you're on SUI lend, you could calculate a liquidation price for that levered long position. That would be pretty cool to see.
Yeah. Perhaps you could do a average across all lending positions and would you want to match against your whole portfolio value, or and then do a calculation of that, or just the lending positions?
So it would only be important per protocol. So if I've got, a SUI lend borrow position on SUI lend, and I'm supplying SUI and borrowing USDC, basically like an isolated levered long, I would just want to see for my SUI lend, SUI levered long, okay, this is the interest rate that I'm paying on the stable. This is what I'm earning on SUI. This is my net interest margin. This is how much I'm paying to keep the position open. This is my liquidation price. If SUI were to move against me, I know now, okay, I'm in a levered long trade. And if SUI moves against me to the downside, I could face liquidation. Here's that liquidation price. That would immediately make it clear that, hey, it's not just a money market, it's actually a trading protocol. So that would be great to see.
It's coming.
Good.
My hand is shaking because I'm taking so many notes. No, it's great. It's great.
I'm actually running a poll real quick to just ask the audience if they use, if they use DeFi, tracking tools or tracking tools in general for their positions.
Oh yeah. So
that's lending. What about tokens? What does it say there under tokens?
So this is just like your an overview of your holdings, and I actually have this is just like overview of the holdings and the combined value of wallets tokens and how many tokens of Solana you have in a protocol, for instance. So it combines that. So it doesn't only consider the tokens you have in your wallet, but it also considers tokens that are working in DeFi or in a protocol. So it summarizes that.
Yeah, I really like that. Now, have you ever thought about turning it into maybe a pie chart? Because sometimes that can be easy to understand at a glance where you're allocated.
Not the tokens. I didn't consider. Are you thinking as a whole or per token to see
yeah, like as a whole, just to be able to see like, hey, you know what? I'm mostly allocated to Solana. You can see that easily here, but the visual.
So it's not a pie chart, it's just a bar. But here it summarizes in the overview the allocations of your assets, and it combines it both holdings and DeFi. So here you get, it's not a pie chart, but I assume it's essentially the same thing that you're like.
Makes sense. This works just fine. Yeah.
Yeah. I mean, if you want, I can make it a pie chart.
What does it say there where it says customize dashboard on the left?
So this is just if you, let's close this one. It is a beta feature that I don't think it's active actually. But the idea was that if you want to have if you don't want winners and losers here, you can remove it and allocations. But for the moment, it's just fixed. So the end goal would be, it would be really cool to have like various cards or certain like data that and you could customize your overview yourself of the information that you think yourself is valuable. But that is for a 2.0 version, I believe.
Gotcha. Yeah, that looks really good so far.
Yeah. And if you want, and then you have pools is just the same as the normal like DeFi Llama wrapper. And then for this, actually it's a little bit more, you can do a little bit more here. Because what you could do is that you could create a manual position, and this is if Block Turtle is not able to properly like find your DeFi position, you could do it in a manual way if you want, and then you simply set up the ranges that you have for a pool. Let's say we have like these ranges here, and you enter the amount that you've have in the pool, and then you can pick an entry date and add the position. So this is if Block Turtle is not able to properly track the asset. I've created like a simple tool to let users set it up themselves manually.
Very cool, man. What does the analytics button say?
So here you could take a little bit of a deep dive into the holdings that you have. Here you'll get the same like token table of your assets. You'll get here you have the pie chart.
There it is. Perfect. That's what I was looking for.
Here's the pie chart. So here you get the chart of top holdings. You'll get also a network pie chart. It looks a little bit crappy now that I've zoomed in, but I hope it's fine for you. So you can see like the distribution you have across the various networks. And then again, the market cap distribution. And I will ensure to clarify how Block Turtle classifies the various market caps. That is a really good input. And you can do, here we have in the side panel, you can like, if you want to like get a little bit of a detailed view of your SUI position. Here there's a lot of going on, and this is still in beta and needs more tweaking. But here you'll get, you can see like what am I doing? What am I using SUI for? What do I do with it? And here you get a like overview of, okay, so it's in Bluefin, it's working in Cetus in the liquidity protocol, and it's used in Suiland in Navi. And you have a investment summary, and how that works it takes all the swaps that you've made for SUI, and it calculates the average buy price for that. So if you swapped this SUI for USDC, then it's considered a sell. If you do the vice versa, it's a buy. And then this how this works is that's how you get the like average buy price, and then you
Looks
can
great.
get
Yeah, you see
yeah.
where it says break even price? Yeah. Wow.
Yeah.
Yeah. That's pretty cool, man. I like to see that.
Yeah. So this way I can like know that like on a day when the market is pumping and is pumping 50%, and I say, yes, SUI is like I got money, but the reality is like I haven't made money because I bought it on average for 3.5. So so that's the thing that I myself need to like have a good understanding of what I've done historically with a token, and like then I could take a decision of, okay, what should I do next? What kind of goal should I have for this token based on what's happened historically?
Looks great, man. What are some of your favorite features in either this analytics section or maybe in a different part of Block Turtle?
So like my favorite feature is like overview. Overview, and like just get like a overview of the positions I have in this one. I use myself like daily, and I sync and I see how the positions are doing, and that means I don't have to go to these protocols and connect my wallet to like put in my password and do all the things.
Right,
I
right.
can just sync it here, and I'll get an overview of how's it doing, and I really like that. And then I could also like share. I have this like holdings section here, and that is where you can, if I want to set up a strategy for myself, like, okay, so I bought it for an average of 3.5, and then I want to map out various sell targets for myself. I could say that, okay, I want to sell a certain amount at 1.5, and then this one helps me and say, we can, if I do that with the combined assets that I have for both in DeFi and in wallets, then I would make $6 based on the current price level. What I want to have is as well based on the average buy, so I get a better projected profit here. But this is kind
That's
of
very cool.
yeah, this is kind of
I actually have a quick question.
Yeah.
Is now when you're connecting to this, I mean, are you actually connecting your wallet, or is it just more passive than that, or?
It's so how it's working is it's not connected to your wallet, because
Okay.
it just takes your wallet address and reads what's on SUI blockchain for that wallet address. So for SUI, it's objects, and it like reads all the objects that you have connected, associated with the wallet, and then it pulls it, and it stores it in the database.
I
So
love that. I really like that. I do not like it when you have to connect your wallet to to tools like this. So the fact that you don't have to actually connect your wallet is a very big deal for me.
Yeah. And I think like you don't for this kind of like project, you don't need to connect the wallet, and everyone knows their wallet address. You can just copy it from your like wallet. So I don't feel like, just to make the whole platform feel a little bit more I don't know, safe in a way. I don't want the wallet connect. I just want input.
Well, and liability. I mean, it's you don't want to be responsible for the security needed
Yeah.
and the audits and all those things to make sure that if people are connecting their wallet, that there's no exploits or anything malicious that somebody does. So it makes you can sleep easier at night too.
Yeah, for sure. So and that is the whole reason why I chose that. I was experimenting a little bit with Wallet Connect, and although it works, I kind of decided that nah, I just want to like keep it simple, keep it safe, you know.
So Jonathan, you showed us, tracking SUI positions, tracking Solana positions. Can you show us some EVM chain stuff? I'd be curious to see what it looks like.
Yeah, and what I should mention about EVM is that currently I have no well integrated protocols. So for instance, pool positions that you have on Uniswap, you won't get this range indicator for EVM yet. The only thing that you get is a summary of tokens that you have in the protocol, but it doesn't give you any like detailed information about what they are actually doing. So yeah, it's not like you don't get as much detailed information at this moment for the EVM, but you get like an overview of assets that you have on the protocols.
Okay.
Yeah.
So it looks good to me. Take a look at the Aave. I'm curious to see, what does it look like for an Aave position?
Yeah. So it's the assets that you've supplied, the assets that you've borrowed, but you don't currently have them like if you're like the API or APR for these assets. And that's because I've like the last couple of months I've been focusing heavily on like making this a really good like SUI and Solana like tracker.
Got it.
Yeah.
Yeah. I mean, it looks great for Solana and SUI. And I'm sure that, have there been any, challenges developing this software for EVM chains that, you haven't found building it for SUI or Solana?
So the way that this project started from the beginning is that the whole EVM chain, I pulled that from an API, and I kind of sort out the data the way I want it for the portfolio. So that is API based. Meanwhile, and that is fairly simple, but I don't have as much control. I've come to learn about like what's actually going on within the protocol. And that's why you'll find that for Solana and SUI, there's a lot of more detail, because then I've like rolled up my sleeves and actually did the dirty work.
Got it.
Yeah.
So it looks to me like all of the information on Solana and on Sui that, I mean, hey, that is from what you showed us today. It looks like this block turtle piece of software that you built is a phenomenal Solana and Sui tracker. And the only thing that I would really want to see is, VRP and,
Yeah,
maybe a little bit more color on the lend borrow side. But
yeah,
other than
yeah.
that, I think that it looks really good. And I can't wait to see this applied also to the EVM chain tracking.
Yeah,
You know,
I think gradually like integrating protocols on the EVM, like the major ones. Obviously, like within the EVM ecosystem, it's so huge. So doing that takes a lot of time, but starting
right.
like doing a couple of protocols at a time, and yeah, and then it will be great, I think.
Awesome, man. Mike,
Yeah.
what do you think? Oh, you're
I
muted. There we go.
I took it off. No, it's I mean, I love tools like this because for me, I'm very data. I love looking at when I have positions open. I hate having them on different platforms, different protocols, different chains, and having to try to keep track and make sure that you stay profitable.
Yeah.
Because the more positions that you have, the harder it is to stay on top of them. So it's very time consuming. So having data aggregators and aggregators like this that can look across all the different chains, just by knowing your wallet address. Again, not connecting your wallet to where you're potentially exposing yourself to malicious attacks. Just putting in your wallet address. It's read only. It looks at your positions. It takes the data. It crunches the data, and it tells you, are you profitable or are you not?
Yeah.
To me, these tools are necessary if you're going to be successful.
Yeah.
Yeah, I really like what I saw. I really
I'm
do.
so happy about the feedback. Like you had great questions, and I'm like so happy to be here and sharing this.
Well, Jonathan, I know that you mentioned potentially having like a code for the audience to where they can try it out and kind of maybe they can help give you some feedback as well.
Yeah. Like I should have prepared.
Oh no, you're
uh,
fine. We can if
yeah.
you want to send me that after the show
Yeah. Yeah.
or
Yeah. Yeah.
then
So
I'll put it in our Discord. So
yeah.
anybody that's interested can log in, and then if you have a mechanism in place on the app, or if you
Yeah.
want to join our Discord, they can give you input on it.
So we'll set up I'll set up a dedicated link,
Okay.
and from that link you can just it's a URL dedicated to you, and then you can just sign up from there, and you'll get like full access to every feature on the platform.
Nice.
Yeah.
And,
Cool.
I want to stress that like, none of this is paid. Jonathan is just here to we're trying to give you access and make you aware of great
Yeah.
tools like this that are out there. So
Yeah.
Jonathan didn't give us any tokens or any money or anything like that. We're just Jonathan's a good dude that David ran into, and has a great tool that we think might be of value to you.
Yeah, there's no tokens you can buy on this.
No,
So
no.
yeah,
I
yeah,
always, we always try to be very transparent about stuff like
yeah,
this.
yeah,
We're
yeah,
very much about integrity here, and so I just want people to know that we don't get paid. The guests that we have on, none of this is paid advertisements or anything like that. We just love to bring different projects on so that you're all aware of like the OpNet. They didn't pay us anything. It's Canton Network. Schalke Fur. They didn't pay us anything to come on. In fact, that's one of their policies is they will not pay to go on to shows and stuff like that. So
yeah,
it's very important that you understand the context of the information that you're receiving when you're watching channels like this, because if it's incentivized, if it's paid for, they're going to
yeah,
paint,
yeah,
the best picture they can for, the person that's paying.
yeah,
It's, so it's important to understand that.
yeah. So yeah, like welcome and try it out. You can directly on the platform, just send me a chat if you have like questions. Maybe if you want, I can jump on the Discord and say hi if people have questions. I don't know.
Absolutely.
But yeah, I'm loving the feedback. I'm loving like the also the like commitment and the expertise that you guys have to bring DeFi and crypto knowledge to the common man like myself.
Well, Jonathan,
Well, I mean,
I'd love to see
oh,
you
what? Sorry.
join the school community. I'd love
Yeah,
to see you join the Discord.
yeah.
I'll give a link real quick. Just in, I'll send you a link to join, and then I'll start using this tool.
Well, David, on the on our channel, on our YouTube channel, I put up the DeFi University link and the Discord link, so it's all there.
Perfect.
I mean, do you guys want to go over a couple more some breaking news that just came across my desk?
Yeah, what do you got, Mike?
So it looks like a dormant. Oh, actually, you know what? I'm going to share my screen because this is all from our newsletter. So let me zoom in a little bit here. So it looks like a dormant Bitcoin whale woke up and moved $147 million in Bitcoin. So a Bitcoin wallet that had been untouched for over 13 years moved 2,100 Bitcoin, valued at 147 million or 147.7 million on Friday, consolidating funds into a new address amidst a low fee environment. So, I mean, what's your gentleman's take on these whales that we're starting to see that have been diamond handing this Bitcoin for so long, starting to wake up and starting to move some of these tokens around?
So, dude, check this out. That particular whale
Yeah.
purchased 2,100 Bitcoin on July 4th, 2012.
Uh-huh.
For $13,685 and paid $6.50 per Bitcoin.
Yeah.
Now, they turned that $13,685 into $147 million.
Someone's having a good payday.
So,
right?
1,000,000% gain. And if they just hold, then that's literally all they've got to do is just hold.
Yeah, I mean, and they could hold that Bitcoin, take out a very, very low, loan to value ratio loan on it. I mean, they could take a 10% loan on it or a 5% loan on it and have a ton of money to, do other things with. I mean, I don't understand anybody that got in that early on Bitcoin, why they would sell and incur the taxes. The taxes alone on that's going to be insane if they do sell.
Yeah, so it looks like this particular wallet is not selling and instead just migrating that Bitcoin to a different, more modern address. Because, it looks like they're one of the original legacy addresses. It starts with 1NB. So that's an old school address. And it looks like they just moved it. Yeah, they moved it to a different, more modern address.
Well, that makes sense because I that one buddy that I'm always talking about that told me about Bitcoin back, after my last deployment in 2011, 2012. He has $500,000 worth of Bitcoin on a hard drive in a safe that he can't access, and so moving it to a more modern wallet to where you can potentially recover the seed phrase or the private keys is probably a smart thing to do, So no, absolutely. Dude, what are your thoughts on that, Jonathan?
Yeah, absolutely. I would get I would be nervous having that in a older wallet, and like I said, like someone's having perhaps a great payday or just updating. I rarely get nervous when I see this type of news, because in the grand scheme of things, it's it doesn't matter.
Oh,
I
yeah.
think.
Well, you have Viking blood, so you don't get
Yeah,
nervous about anything.
yeah, no, no. We have Spotify, IKEA, and Viking blood.
That's right. That's right.
Yeah.
All right. So we got Solana ETFs gain traction with over 638 million in assets under management. So 6 spot Solana ETFs are now actively trading in the United States, collectively managing over 638 million in assets, signaling growing institutional acceptance of the Solana ecosystem. What are you seeing on this, David?
Yeah, so I think that they actually hold closer to $1 billion in
Okay.
assets under management now. But
So
what
our newsletter pulled that from Dex Tools.
Yeah, so it looks like it might be closer to 985 million, and I'm just
Okay.
looking at far side. Um,
Okay.
but I mean, hey, that's great for Solana,
Yeah.
because it's going to help moderate volatility a little bit. That's what we've seen with the Bitcoin ETFs, with the Ethereum ETFs, and I would assume that over the next couple of years, we'll probably see that with Solana ETFs and probably a lot of other tokens also.
Mhm.
But these ETF flows, I'm taking a look right now at Solana ETF flows. They've been, majority positive for the last couple of weeks. If we take a look at the Ethereum flows, outflows yesterday and the day before. But over the last 2 weeks, about 50-50. 50% of the days have been positive, 50% of the days have seen outflows. And then if we take a look at the Bitcoin ETFs, the last 2 days have seen outflows, but we had 7 straight days of inflows leading up to that. So let's see how things close today with markets trading off just a little bit. But the ETF products, they basically give a whole new set of investors the ability to purchase digital assets. So these institutions that would not be able to necessarily buy spot and custody these assets themselves, they can buy these ETF products. So it seems to be working. It's definitely broadening adoption, and I think that's a positive thing. It's definitely moderating volatility. Now, you could make an argument that that's not a positive thing, because without the volatility, you don't get those big parabolic pumps as much. That could have been part of the reason why we didn't get that parabola, this bull cycle for Bitcoin. So,
No, that's a
something to think
very,
about.
very good observation because, yeah, we really never did. We had the initial Bitcoin pump. We had those ISO tokens, that pumped, and like we talked about before, you had the Trump token launch and the Melania token launch that sucked all that liquidity out. And right as we were about to kind of rebound from that, we had October 10th. And it just after that 1-2 punch, it just seemed like we never got that parabola, that banana zone that Raul Paul always talks about, and pretty much went into a bear market. So, yeah, that kind of sucks. But let's transfer over into precious metals really quick. So, gold and silver continue to decline amid geopolitical tensions. Gold and silver prices have fallen sharply amidst ongoing conflict in West Asia, with gold dropping to about 4,600 an ounce and silver hovering around $73 an ounce, facing a third consecutive negative weekly close due to a strong dollar and inflation fears. What are you seeing along those lines, David?
Yeah, so I've got to track rates. That's the thing. Really, really important to track rates. And the reason why it's so important to track interest rates when you're looking at precious metals markets is if interest rates are shooting higher, as they are and have been for the last 3 weeks, if interest rates are pushing sharply higher, that should be a tailwind for the dollar. And so if the dollar starts to break out, maybe it starts to break out next week, well, gold and silver are telling us that, there's already a flight to safety, and it's not the precious metals. The flight to safety is the flight to cash. And
Yeah.
so it looks to me like, gold and silver might have more downside ahead. Silver likely has some support at $54. Now gold, if I'm just taking a look at gold here, gold actually just today and yesterday broke
We got
down.
time if you want to share your screen.
Yeah. Here, let me go ahead and do that. We can take a look at a little bit of technical analysis here. Let me bring up my screen share. Let's check this out. So the first thing that I want to do with this, and Mike, I just shared it, but I didn't add it to the stage.
I did.
Gotcha.
All good.
So the first thing that I want to do with this is just remove some of these drawn objects real quick. This is gold. So just take in the parabola over this is a daily chart. Notice we've seen a similar pattern play out several times where gold puts in a high and then tests a level of resistance and then eventually breaks out and pushes to fresh highs. Here's a high, test resistance, break out to fresh highs. Here's a high, test resistance, and this time fail. And so that pattern has been broken. And so let's just go ahead and remove those drawn objects and let's throw down some trend line support. Now notice, anchored to the lows from August of last year. There was support here, and then it broke yesterday. But not only did it break yesterday, but we also got a retest of what is now resistance today. You see that? So we got the breakdown and then the retest of resistance, which held. And so that tells me if we get down below this level right here, the lows from yesterday, if gold gets down below the lows from yesterday, well, then I would expect it to go to its 200-day, which is down here right now at 4,100 or so. That would be the next level of support, that 200-day moving average. So gold looks pretty weak here. And that makes sense, right? Because yields on the 10-year are pushing straight up for the last 3 weeks. If we zoom out on this to a weekly, you'll be able to see it even more clearly. So yields are pushing sharply higher. And it looks like the resistance is quite a bit higher, like another 25 basis points higher. That's a big move. That's a really big move. So as yields push higher, you should expect the dollar to eventually break out. So the dollar, and this is a weekly, last week, the dollar and this week found resistance at 100.5, just above 100. So if this level of resistance breaks to the upside, then the dollar could rally all the way up to its 200-day moving average up here at 103. So if the dollar rallies up to 103, that would put further pressure on gold and on silver and on everything else. So crude oil included, that would put pressure on commodities too. So, here's silver. Now, silver, if we zoom in to a daily, silver's level of support is right here. You see this double top? We had a top here in October of last year, found resistance again at that same level in November of last year, and then we got the breakout. So this is a level of support now. It was resistance. When it broke, it flipped and became support. So that's where I expect silver to go to. If the dollar breaks out, then silver would likely have some support down here, $50, $55, something like that, right around here. Could actually be an interesting buying opportunity on silver at $50 if it gets down there. But that's what I see for gold, silver, and rates. And then if you take a look at the S&P and the NASDAQ today, breaking down below their 200-day moving averages on a Friday, going into the weekend. So, a breakdown of some important moving average support going into the weekend. Here's the NASDAQ breaking down below that level of support. The Russell, not quite. The Russell, these are interest rate sensitive items. So the Russell not quite breaking down, just still clinging to support. If we take a look at the Dow, I think the Dow actually broke down first. It did. Yep. So the Dow Jones Industrial Average breaking down below 200-day moving average support. Now, they say nothing good ever happens below the 200-day. And I think that they're right. Take a look at the VIX, volatility expanding, pushing above, staying elevated above 20, now at nearly 25. And then if we take a look at VIX, this is the calculation, not the tradable one. You can trade options on this, but VX is the tradable futures contract. VIX here at 26. So, cash equities breaking down here. This is SPX. This is the cash. What I was showing earlier were the futures contracts. Here's the cash index breaking down, but sitting at horizontal support here. So broke the 200-day, sitting at some horizontal support, but a little bit lower. If this starts to accelerate into the last couple hours of the session, then we'll see how things close. But if the S&P accelerates down, and I zoomed into an hourly chart here. So here's where we're currently trading. There's 2 hours left in the session, 2 hours and 14 minutes. So if we see the S&P accelerate to the downside in the last 2 hours of trade today on a Friday, that would be a pretty bearish signal that would tell me, hey, maybe we get some more weakness on Sunday when the futures open back up. So yeah, I mean, there's a lot going on. If we take a look at the Mag 7 items just real quick, and we can do this on a daily, Tesla starting to break down below its 200-day moving average here. So 200-day moving average, here's the breakdown, gap down. Notice that gap there. And support comes in at the horizontal at 358. Take a look at Google. Google, holding up pretty well, still trading at $300. It's got horizontal support at 293. Google well above its 200-day moving average. Google an outperformer. NVIDIA just today breaking down below its 200-day moving average with horizontal support at 153 and basically trading at a level of horizontal support now. So NVIDIA, if NVIDIA pushes sharply lower, it would probably drag down the semiconductors with it. Microsoft, this is software. So remember, Bitcoin right now is positively correlated with software. So if we see big software players rolling over and breaking below support, I would expect Bitcoin to have another leg down. So Microsoft support at 345, trading well below its 200-day moving average, bearish. Here's Apple. Apple just clinging to its 200-day moving average here after having put in a little bit of a top here. But yeah, let's see what happens with Apple at the 200-day. Likely it breaks the 200-day to the downside. Here's Amazon. Amazon gapped down after reporting earnings, last quarter's earnings, gap down and go. So that's very bearish. Here's that support, this trend line support, trading well below that 200-day moving average. Notice the gap fill, big gap fill here to the tick also. And moving back to the downside, looks like, trend line support comes in at 196. Bearish Amazon and Meta. So Meta and Oracle, the next two we're going to take a look at, these guys have started to lever up their cash flows to get a bigger piece of the AI market that isn't paying them anything. Like they're not making enough revenue to justify the capex or the borrowing to increase capex. So getting punished, is Meta. After earnings gapped up, filled the gap from the last earnings report, and then just reversed after that gap fill. And now trading below not just the 200-day moving average, but also long-term trend line support. So the next level of support for Meta is just a couple dollars lower at 583, but fail that, and Meta goes to 480. So yeah, it doesn't look too hot for Zuckerberg. Here's Oracle. Now, Oracle, big software player, but Oracle bounced after reporting and was unable to push higher. So this is the earnings announcement, bounce here after reporting earnings. If I zoom in, we'll be able to see that a little bit more clearly here. So big gap up after earnings, and then spent the next 2 weeks just filling the gap and giving it all back. And so now, it looks to me like if Oracle tests this level of support again, it might break, which would mean Oracle goes to 120. So Oracle's a big software player. We've got to also check in on IGV. IGV is a software ETF, and this bounce is starting to look more and more like a dead cat bounce. Now, why in the world is IGV important? Well, because if we throw Bitcoin over top of software, you can see this positive correlation. So if we just take a look at this here, this is a pretty positive correlation. And if software is rolling back over and Bitcoin's rolling back over and the S&P is rolling over here, if I go ahead and delete this, S&P breaking 200-day moving average support as rates are pushing straight up big on the day, 2.1%, with crude oil also pushing up again, breaking, it's knocking on the door at $100. As you see the safe havens get sold, gold, silver, the precious metals get sold, and bonds getting sold hard on the day. This is risk off type behavior. All we need is a flush. That's all we need. We need vol to really spike. We need like a big sharp move higher in volatility up to like the mid 30s, and then people would start losing their fucking minds. So that would be a great opportunity though, because when you get these spikes in volatility, it usually means that the majority of that selling pressure is just about out of the way, and you might be able to step in and buy a dip. So I'm just waiting for a spike in the VIX up to like 40, 35, 40, something like that, to tell me, okay, maybe this first wave of selling is about done, but we haven't gotten that VIX spike yet. And so something that I continue to watch is the MOVE index. This is bond market volatility. So I would not be surprised to see the MOVE index back up at 95 when it prints at the end of today's session. So all in all, Bitcoin and all the rest of the digital assets look to me like they are clearly in a bear market. So
sweet. So I'm going to read this last. It's the node take. It's the last tab on the newsletter, and then I'm going to kick it over to you, David, to close us out. I'm going to jump on over to DeFi High, and I'll let you know as soon as you guys wrap up and in the stream. Then I'll make sure that I'll make sure that we're started over there before, so we can make sure that live redirect occurs. But it says the watch list, the next 12 hours, the ongoing discussions around crypto legislation or regulation and the Federal Reserve stance on interest rates remain the most critical catalysts to watch for market direction in the next 12 hours, impacting both digital assets and precious metals. So I'll leave you with that. And Jonathan, I want to thank you for being here. I very much enjoyed going over a block turtle and seeing some of that functionality. And I'm kind of I'll be very interested to see the how it evolves with the input that you got from David and potentially the input that you get from our community.
Yeah, I'm looking forward to seeing the gaming and chill and having a couple of people. Test out the platform, give feedback, see if you like it, what do you like, what don't you like, and I just want to make it a great platform. It's been a
awesome.
pleasure.
Yeah, no, I really appreciate your time, Jonathan. Thank you. And so for the last couple of minutes that we've got here, I usually end up, sharing like a piece of educational content. And so what I'd like to go through is some content on, what's actually been making me some money. And let's talk through that. So I'm going to share my screen and we're going to hop on over here to DeFi University. And what I want to go through here is synthetic options. So I'm running basically like a synthetic short put, but I don't have any positive deltas on. I'm long futures and long ETH spot, but then short a lot of calls against those futures and spot position. And so I want to run through this piece of video content in the last 6 minutes that we've got, just so that, everyone out there who's watching knows what I'm actually trading and what's working for me right now. So I'm going to go ahead and play this. And
today we're diving into something that sounds like it's straight out of a fantasy novel, financial alchemy. We're talking about synthetic options, this wild strategy that lets traders literally build one financial asset using a combination of others. So how on earth is that even possible?
Well, let me start by asking you this. What if you could get the exact same result as selling a stock short, but you never actually had to borrow or sell a single share? I know, it sounds kind of impossible, right? But this is the whole idea behind financial replication.
And what you create is called a synthetic position. You're basically taking a portfolio of different things, like stocks and options, and combining them in a very specific way to perfectly mimic the risk and reward of something else entirely. You are, for all intents and purposes, building a financial copy from scratch. So, how is this financial alchemy actually done? I mean, how do you really build a perfect replica of something like a stock option? Well, the secret here isn't some kind of magic wand. It's all about pure mathematics. You see, in the options market, the prices of different assets are all locked together by this really specific, unbreakable rule. And that fundamental rule has a name. It's called put-call parity. This is the blueprint. This is the core concept that makes all of this replication possible. You can think of it as the key that unlocks the entire world of synthetic positions. Put-call parity basically tells us that there is a permanent, unbreakable link between four basic financial ingredients. Just think of them as these components that have to, at all times, be in a state of perfect balance with each other. So what are these four ingredients? Okay, first, you've got a call option. That's the right to buy a stock. Second, you have a put option. That's the right to sell it. Third, you've got the stock itself. And finally, you have some cash sitting in a risk-free account, which is basically like a loan. Now, this formula right here, this is the blueprint. But don't get bogged down in the symbols, okay? Just think of it like a perfectly balanced scale. It says that the value of one combination of these assets must equal the value of the other. And if they ever fall out of balance, even for a split second, computer algorithms jump in, make a risk-free profit, and in doing so, they instantly snap the prices right back into that perfect alignment. That equilibrium is the engine that makes all of this possible. So here's the crucial takeaway from all that. Because these four items are locked in this perfect balance, if you know the price of any three of them, you can always solve for the fourth.
Thank you, Ellie.
That
your
means you
comment.
can literally create
It's
a
actually
call
Notebook
option
LM.
using a put, the stock, and some cash. Or you could build a replica of the stock itself. This right here is the heart of financial replication. All right, let's make this real. Let's say we want to create the risk profile of selling a call option, what traders call a short call, but we want to do it without ever actually selling one. We can use our blueprint to build it. And you know, the logic is surprisingly simple. First, we start with our balanced blueprint, that equation we just saw. Then, we just do a little bit of algebra to rearrange the pieces and isolate the one thing we want to create, in this case, a short call. And what's left over gives us the exact recipe for building it. And there it is. That's our result. The rearranged formula gives us the recipe. And it tells us that to create a synthetic short call, you have to do two things. You short the stock, which is a bet on its price going down, and you sell a put option. That specific combination has the exact same profit and loss profile as a regular short call when it expires.
Right. So here's the thing. If you want to recreate the payoff curve of a short call, but you don't want to be naked short a call, well, then you can sell the stock and sell a put, and that together will recreate the payoff curve of a short call. So you can do this for anything, but you need two out of the three ingredients. So, that means spot, options, and cash. So if you've got two of the three, then you can recreate the third.
It's a perfect replica. But here's where things get really, really interesting, especially for professional traders. Okay, so we know the replica has the same payoff at the very end. But does it behave exactly like the real thing during the life of the trade? So is this synthetic version a truly perfect copy? To answer that, we have to look at what traders call the Greeks. These are just measures of how sensitive a position is to different things in the market, like price changes or interest rates, or even just the passage of time. All right, let's see how they stack up. When we look at delta, that's just sensitivity to the stock's price direction, they are identical, a perfect match. But when we look at rho, which is sensitivity to interest rates, they actually behave differently. And check out that third row, dividends. The natural call option isn't really affected by a dividend payment, but because our synthetic version involves shorting the actual stock, it gets negatively impacted. So no, they are not perfect copies during the life of the trade. Now, these differences might seem really subtle, but for a professional trader, they are everything. These aren't seen as flaws, they're features. It means a trader could build a position that bets against a stock's price, while at the very same time making a bet on rising interest rates. That's a
Alrighty. So I think we're going to have to pick this up next week. thank you everyone for joining live. And Mike, if you want to take over the sticks, I'll hand it off to you, because otherwise I'll break something.